Hi, David Duff from Ashland Accounting. In our last video we talked about the different types of entities. I want to make sure it's really clear. A lot of clients walk in and say, well, I want to be an LLC. All the different entities we talked about in the previous video, whether it's a sole proprietorship, a sub-S corporation, or a C corporation, all of these can be LLCs. It's taxed exactly the same way as I mentioned before, with requirements for self-employment tax, reasonable salary for the two different corporations. Keep in the back of your mind that there's a couple highlighted tax codes this year that have changed a little bit. One of them is that entertainment, taking a client out for a meal, is 50% tax deductible. So we book it throughout the whole year, and we file the tax return, we take 50% off. The other thing is that you're entitled to mileage at 58 cents a mile. Occasionally I'll leave my desk and I jump in the car and I go see a client. So I bought a used car about 30 days ago, and now I need an oil change. And the reason why I take it to the Shell place down the street is because they keep track of my mileage. I've got to keep a mileage log. I've got to keep a receipt of what I'm doing, where I'm going, what I'm doing, but I do it with the oil change place because they keep track of the miles for me. So if the IRS says, we don't believe you drove all those miles, I can give them copies of all the oil change receipts. This proves I drove all those miles. So LLCs can be any one of these entities. Again, keep in the back of your mind of the requirements. One of the things that we do for a lot of our clients is we make up financial statements. The statements will give us totals. Now, an accountant needs these totals almost more than you do, because where it says officer's salary, if it's June, it's been 6 months, we got to make sure that that looks reasonable by percentage out of $1 or 100%. So the salary is divided back into the gross that determines a reasonable percentage. Entertainment needs to be reasonable. Office expense needs to be reasonable. In an upcoming video, I'll talk about all the things that we can use by these separate categories that will be tax advantages to many small businesses, and many businesses don't use these. I want you to keep in the back of your mind that having great financial statements, under a sole proprietorship, you're not required to keep complete ledgers. It's a good idea that you do it, but it's not required. Under the sub-S or the C corporation, you're required to have ledger accounts. Now, every so often somebody walks into me and says, should I spend the $250 and buy QuickBooks? And I jokingly say to them, sure, you can if you want to learn it and use it. But the problem is, in all the 25 years I've been doing accounting work here in Central Florida, nobody ever brought me in a QuickBook file that I could just use. I had to clean it up. So my comment is, off of one of our computers, we can input those ledgers and those totals to give you management reports, and the management report comes to you every single month as part of our service, and it's done by an accountant, not a bookkeeper. If you go to many accounting firms, you'll be assigned a bookkeeper who will take your information and put it in. Sometimes these people have high school diplomas, sometimes they don't. But they were taught by the accountant to do the bookkeeping. My staff are all college degreed, all have licenses to do the work that we're supposed to do, and we're insured. We want to make sure that you get the best help that you possibly can. Every single year I attend the IRS forum that's held here in Orlando every single year, so I can max out on my 18 credits so I can update myself on all the new tax codes as they change. One of the first videos I showed you was that giant tax book with all the different tax code changes. I've got to go through those as these things start to change. You need somebody that's really alert and does the work. You don't want a high school diploma person doing your books, because in some accounting firms the management doesn't look at the books until the end of the year. I look at your books every single month, and I look for problems. I look for inconsistencies. I look for percentages that are off. These are the things that we try to do for all of our clients. We want to make sure that we can help you make profit and keep more of what you made, because making money is great, but keeping more of what you made, that's better. Thank you for watching this video.